Okay, so ACCA has clearly mentioned how we should follow IFRS 18 in the context of ACCA exam. Clear?
Mhm.
Yeah, and this is going to be tested from September 2025 onwards. Okay, so it would be
Okay.
evident that out of the questions that you're going to get for the essay, one among them would definitely be something related with SOPL. Clear?
Okay.
Okay. So IFRS 18 has been introduced in order to replace IAS 1, which we have previously studied. Clear?
Mm-hmm. Yeah.
Okay. So in IFRS 18, the SOPL has a major change. Okay.
Mm-hmm.
The SOPL has a major change in the sense that it is before we don't used to have so many categories for SOPL, right?
Yes.
Okay. Now what they did was you have studied cash flows. So cash flows, what do we have? We have operating activities, we have investing activities, we have financing activities.
Mm-hmm.
So the same
Yes.
way, IFRS 18 has categorized these five elements into SOPL. Clear?
Yeah.
Okay, so SOPL currently has five elements: the operating category, the investing category, the financing category, the income tax category, where we are going to include the taxes, right? And
Mm-hmm.
lastly, the discontinued operations category. So this would exist only if we have IFRS 5 in the question. Clear? So earlier,
Okay.
what did we do? We had it on a separate component, right? When
Mm-hmm.
we studied IFRS 5, what did we do? We just took it as a single line item and then we did the workings, right?
Yes.
But now there is a different category item for discontinued operations alone. Understood?
Mm-hmm.
Okay. Now, operating income tax discontinued operations. Uh, these are not this is basically not a separate line item or something that is new. This is what you have been doing all along, right? Clear.
Yes.
That
Mm-hmm.
means you have taken the administrative, sales, distribution expenses, right?
Mm-hmm.
At that time, you took it separately. Now, the whole thing is going to go under operating items. Clear?
Okay, clear.
And the tax, that is IAS 12 that you have studied, it's going to
Mm-hmm.
go under income tax section. Clear?
Okay,
And
clear.
IFRS 5 that you have studied, it's going to go under discontinued operations categories.
Mm-hmm.
Clear?
Okay, clear.
Okay. Now the next one is investing category. Okay. So investing category is used for two things, three things especially. One is if the company has any investments in the associates and if the company gains any profits from it or income from it, it goes under investment category. Clear?
Mm-hmm.
And
Clear.
it would also have cash and movements in the cash and cash equivalents. Okay. Or if there is a certain component of the entity which is going to give them a separate cash flow or any of the returns that the company gets from the investments, for example, debt or equity in category. It can be a simple investment, it can be the rent that the company gets from lease, it could be anything. Clear? It could
Yeah.
mainly it is trade investments or simple investments. Clear?
Mm-hmm.
Okay, so this would mean that the income and expenses, such as the interest and dividends which you get, or the rents that you get, or the depreciation that is arise from the assets, or the gain or loss from the asset, would all go to investment properties. Clear?
Clear.
Understood?
Yes.
Okay. Now, the fair value gains and losses of the share of profit of the associate would also be included in the investing category itself. So, if you have any fair value gain or loss relating to the associates that you have actually invested, would go on this category. Clear?
Clear.
Okay.
Mm-hmm.
Now, the financing category. So, financing category is basically all the type of interest that you have till date studied. Okay, whether it is on the IFRS 9 basis, whether it is on the lease, whether it is on any contingent liability that is coming in the future, that is the deferred liability in the future. So, every interest related with the company would go on the financing category. Understood?
Mm-hmm.
Okay.
Okay.
So what is the answers that ACCA expects from FR? When examining FR or in the FR questions, you must know for most of the expenses in the question itself, they would actually tell you where to take the expenses. Okay, for example, if there is a finance cost, they would actually tell you this cost is to be taken in the financing category.
Mhm.
So for
Okay.
that, for following the instructions in the question, you get a separate credit mark, right? So there would
Mm-hmm.
be a mark allotted from the total to the instructions that is being followed. So if you don't follow the instruction and you take the expenses or the income as you may wish, you might lose those marks. Clear?
Clear.
So in the exam, it could be that they might give you a different category items and you have to compile it together, or it might be that in the exam itself, in the question itself, there might be instructions on where to take a certain cost or income. Clear?
Mm-hmm. Okay.
Understood, no?
Understood, yeah.
Now, now the major change in the SOPL is that there is compulsory subtotals in the SOPL. Okay. So
Mm-hmm.
that means after profit cost of sales, you need to take the gross profit. That is a subtotal. And then you take the investment category. Again, a subtotal will come. Clear? So like that,
Clear.
mandatory subtotals that the new IFRS 18 have told the uh, told the users to prepare. Clear?
Mhm. Clear.
Okay. Now, the operating profit, okay, and the profit before financing income tax is something. Suppose we don't have a tax liability or we don't have a finance cost during the year. Still, you have to keep a void line between them. That means if something is not there, you can't omit it. Understood?
Oh,
It's
okay.
the same amount, you have to take it and take the other amount which is not there as zero, but you have to show it.
You
Clear?
have to show it. So it's not like the consolidation we did yesterday.
No, no. Clear?
Okay,
In case
clear.
of SOPL, all right.
Yeah, yeah. Okay, got it.
Okay, now gross profit and profit before income tax are not mandatory subtitles. So if you skip these, it's not mandatory. However,
Mm-hmm.
many entities will present these as additional subtotals because they are necessary for the statement of profit and loss to provide a useful structure summary of income tax. So in order to provide a structure, it is still compulsory for the business units, right?
Mm-hmm.
Okay, so in FR exam, you will see these presented and are expected to present these when preparing financial statements. So in FR exam, you have to prepare this and take this into the respective lines. So this is of a consolidated statement of financial performance. Okay, financial performance as in SOPL. Clear?
Mm-hmm.
So in the statement of profit and loss, they have revenue, cost of sales, then gross profit, right?
Mm-hmm.
And then they're taking other operating income, any operating income that may be there, and operating expenses. So, selling expense, research and development expense, general and administrative expense, goodwill impairment loss, other operating expenses should be taken here. Now,
Okay.
the most important thing is how you categorize the expenses, whether you can take it in at any under any head subheading. No, it should be taken under respective headings. That is, any transport related cost would go on the selling expense, right? Anything
Mm-hmm.
related with IAS 38 would go on the research and development expense. Clear?
Mm-hmm.
Any
Clear.
other salaries and stuffs would go on general and administrative expense. These are not generally splitted and asked for the students, just in case you know. Okay.
Mm-hmm.
Now, the
Okay.
goodwill impairment loss is something that is related with consolidation. So, if there is an impairment loss, you have to present it here. Clear?
Okay,
And
clear.
then you're going to take other operating expenses. Clear?
Mm-hmm.
So, up
Clear.
to this point, it is operating profit. So, there you have your first subtotal. Understood?
Mm-hmm. Understood.
Next, again, you're going to take income and expenses in relation to the investing activities. Clear?
Mm-hmm.
Just like the CFS that you have studied. So,
Mm-hmm.
under this, you're going to take any associate investments that you have, any profit or loss from associates. Okay. And any other investment income that you get. For example, any interest received, any rent received, any dividend received, everything should be taken under here. So earlier, what we used to do was dividend received and rent received did not have a specific I mean specific category. It was just taken into other income category.
Mm-hmm.
Right? Now you have a separate line of item where you should show that. Understood?
Understood.
So this is the profit before financing and income taxes coming into the question. Understood?
Understood.
After that, what you do is you're going to take all the form of interest that there is under lease, under borrowings, under IFRS 9, provisions. That is, yesterday we saw that some deferred payment was being made in 1 year's time, right? So they had
Mm-hmm.
an interest, right? So those
Yeah.
interest, those kind of interest, all every interest that the company deals with would be taken under financing activities. Clear?
Clear.
Okay. Now,
Mm-hmm.
until this point, it is profit before income taxes coming into the picture, right?
Mm-hmm.
Now you're going to take the income tax and then you have the profit from the continuing operation. Clear?
Clear.
Now, suppose your question has IFRS 5 in it. Okay. So then what would you do? You're going to take loss for the year, or if the business is discontinued, it had to be making it has to be a loss making business, right? So
Mm-hmm.
the loss from discontinued operations would be given in a separate line after the continuing operation profit. Clear?
Clear.
Okay. And then you're going to take the profit for the year. Understood?
Understood.
Now the rest is the same. That is, you have OCI, right?
Mm-hmm.
Now, in OCI, what you do is this is basically SBR. So I'm not going to go in detail. I'm just going to brush it off. Okay.
Okay.
So the thing is, there are two types of profit and loss that you get from equity instruments and other instruments, right? So
Mm-hmm.
one is that something when you sell it off, you're going to reclassify upwards. Understood?
Okay.
Okay. That means you're going to reclassify it to the top. Understood?
Okay. Mm-hmm.
And the other is you're not going to reclassify into profit and loss ever. So you have decided that it is going to remain in OCI itself. Understood? So like
Mm-hmm.
that,
Understood.
OCI has two categories: income and expenses that will be reclassified to profit and loss in the future, and income and expenses that will be uh, classified only and only if any conditions are met. Understood?
Understood.
So under this category, we have examples of property revaluation, remeasurements of benefit plans. This is IAS 19, which you don't study, and share of any other comprehensive income from the associates or joint ventures. Okay. Now,
Okay.
income tax relating to income and expenses that will not be reclassified. Okay.
Mm-hmm.
Now, then you have the total income and expenses that will not be reclassified to P&L, right?
Mm-hmm.
Okay, now in the next category, you are going to have income that will be reclassified only if certain conditions are met. So it could be exchange differences on translating foreign operations, which is totally not for FR exam. Available for sale financial assets, not there for FR exam. Losses on cash flow hedges, not there. Income tax relating to income and expenses, that will be just
Okay.
that will be reclassified to profit and loss when specific conditions are met, which is also, these are something that you won't be tested.
Okay.
After that, you
So
get a
for the
answer,
Mhm.
right? Then you,
Okay, so for the
yeah,
sorry, for the exam, where do I stop? Like it's gonna be until
you're just going to mention the revaluation gain on loss here. That's it.
okay. But I have to write statement presenting other comprehensive income and then I'll
Yeah,
say
that's
zero.
all. Just the heading only.
Or just the heading. Okay,
Yeah.
fine.
These are the ones that are mainly focusing on SBR. It's not for you.
Okay.
Okay,
Okay.
then you get the total comprehensive income. This is just as the same that you have studied in IS 1. Clear?
Clear.
Now, then you're going to split the profit between the owners, that is parent and NCI. This particular profit. Understood?
Mm-hmm.
And also the total comprehensive income, you're going to split it between the parent and the NCI. Clear?
Clear.
Now you're going to take the basic EPS and the diluted EPS. That's it. Understood?
Okay, understood.
So this is the major change that happened with SOPL. Okay.
Mm-hmm.
Now, are the principles in IFRS 18 around aggregation and disaggregation examinable in FR? So this is basically whether or not you are categorizing things on the basis of its characteristics. Okay. For
Okay.
example, the rent received, the equity, the dividend receipt should go under investing activities. It is not any other income, right?
Mm-hmm.
Now, in the case of impairment loss, you have to take it under operating expenses under a separate line item, right?
Mm-hmm.
So you can't include or club certain things under with the others. You have to take it as a single line items only. Understood?
Okay, understood.
Also, as I said before, in the FR exam, there could be instructions. They would clearly mention where you should take a certain type of expenses. So if it is there, just follow those instructions. Clear?
Clear.
Okay.
Mm-hmm.
How might management defined performance measure be examined in FR? It is not examined. Okay.
Okay.
That means the EPS and stuffs will not be examined. What impact has the issues of IFRS 18 had on statement of cash flows? Uh, Consequent amendments in cash flows. Let's see. What is the change in cash flows? This is consolidated cash flows. You don't need that.
Okay.
Okay. So this is something that we have already studied. Dividends paid is taken under financing activity itself, and it is obvious that it is going to be taken under that. Okay.
Mm-hmm. Okay.
And in the FR exam, you might be maybe not the see the reason that I made you do this whole cash flow is that so that you can understand the various split in the cash flows, right? In the
Mm-hmm.
exam, they won't be testing you with the whole cash flow. It would be just segments that you have to prepare. Okay, maybe they'll ask, they have the cash flow from operating activities and they'll tell you to prepare financing activities and the investing activities. Clear?
Okay, so what you're saying, they'll give me operating and I have to prepare the other two.
Yeah, yeah. Because
Okay.
the chances are very less that you might be tested for the whole cash flows. Clear?
Okay, got it.
Okay. Now, has the issue of IFRS 18 had any other consequential amendments which are relevant to FR exam? The going concern exemption were previously found in IAS 1. This statement has been moved over to IAS 8, basic preparation of financial statements. The name of IAS 8 has also changed. Previously, this was called IAS 8. Okay,
Mm-hmm.
this has an insignificant impact on FR exam. What impact will IFRS 18 have on sections A and B in the FR exam? It is going to be MCQ question only. Sometimes
Okay.
they would be asking you operating profit, or sometimes they would be asking you profit before financing activities and income taxes, like that.
Mm-hmm.
Okay, so certain
Okay.
categorized profit could be asked. What impact will IFRS 18 have on the section C in the FR exam? In section C, you must answer two questions in one of the each area. Preparation of FS for an individual company or a group of companies. Second one is interpretation of financial statements. Okay, for
Mm-hmm.
a group of companies or an individual company. The chances are this is going to be a group company. Clear?
Okay.
This is interpretation is basically ratios. Clear?
Yeah, okay, clear.
Remember that in each exam, you will have one question on an individual company and one non-complex group of companies. Clear? So one
Okay.
question on individual and one question on complex. On individual, it could be CFS also. Clear?
Okay,
Not
clear.
just CFS, it could also be a CFS. Clear?
Okay, so for section C questions, there are four categories that might come, right?
Yes, exactly.
Console, ratios,
Hmm. Ratio,
uh,
you must expect it would be there, sure.
okay, ratios for sure it will come. Okay.
Yes. But then the other category is CFS,
Mm-hmm.
one consolidation,
Yeah.
and one individual FS. It could be SOPL alone, it could be SOPL and SOFP together,
Mm.
it could be
Yes, okay.
SOPL and cash flows, it could be
So
anything.
cash flows can come alone.
No, cash flows would
No.
come with SOPL also.
Oh, can come with SOPL. Okay.
Okay. And this is just a hunch because ACCA doesn't go by hunch. Earlier, it was possible for us to predict questions or have a good guess of what might come next, right? Now the
Mm-hmm.
problem is they are keeping on changing their patterns. Okay.
Why
Uh,
are they like this?
they knew that people are catching on them, right? So what happened was in the previous exam, a certain set of students prepared for tags according to what might come in the exam, right?
Mm-hmm.
And strangely enough, in that particular exam, the SCCA changed the entire strategy, and the questions got so much mixed that the students were not able to do it properly.
Mm.
And this also happened with an FA exam of my student. She prepared everything and went, okay. So she concentrated mainly on the problem part, right?
Mm-hmm.
But as she sat for the exam, entire question paper, majority of them were on theory basis. So she was like,
Okay.
the problems were very less. So she concentrated on it more, but the whole thing was a theory. So it's just that the
Mm,
pattern keeps on changing.
I
Clear?
see. Mm-hmm.
Okay. Now remember that in each exam, you will have one question on an individual company and one on a non-complex group of
Mm-hmm.
companies. Preparation of FS. You will be required to prepare statement of financial position, an SOPL also, which may include other comprehensive income or statement of changes in equity. SOCE is something that is going to be there for sure. If
Okay.
you're going to go, if the question pattern is SOPL CFS, then you would have an SOCE. Clear?
Okay.
If the question
Yeah.
pattern is SOFP, you would have SOCE with it as well. And
Mm-hmm.
SOCE is very easy to make. It's not a big.
Mm-hmm. Okay.
Okay. You have already done one question on SOCE, right?
Yeah. Yeah.
Okay. You may also be required to prepare extracts from statement of cash flows. This is what I told. It's going to be extracts. It's not going to be a full cash flow statement. Whereas
Mm-hmm.
there are minimal changes to the statement of financial position and the SOCE. IFRS 18 might still be followed. For extracts from cash flows, you must remember the indirect method now starts with operating profit and not profit before income tax. Okay. So that is
Mm-hmm.
the major change. So the first line, profit before tax, should be replaced by operating profit. Understood?
Understood.
Okay, you must remember that the first line should be changed. Okay.
Mm-hmm.
Also, you must remember that the dividends paid and interest paid are presented in financing activities. So, interest paid earlier, we used to take it after the cash flow generated from operations, right?
Mm-hmm.
Now, these are to be taken under financing activities. Clear? This is more logically, it fits right?
Mm-hmm.
Okay, now the SOPL has the most change. You should be aware that the pro forma and all its subtotal as shown above and be able to prepare financial statement in that format only. Remember to follow any guidance on the presentation on disaggregated items within operating expenses which will be included in the scenario. That means in the question. Second one, interpretation of FS. When interpreting FS, it is important to recognize information presented in IFRS 18 formats, right? So when
Mm-hmm.
you compare, for example, you're not studying ratio yet, but I'll just give you an example. Suppose you have two FS, right?
Okay.
And you are comparing with operating profit of one FS with the other. So it is clearly explainable. You can clearly pick out how much operating profit was for this year and how much was for the previous year, right?
Mm-hmm. Yeah.
So things have become more clearer with IFRS 18 in the question. Clear?
Mm-hmm.
When
Clear.
calculating return on capital employed and interest coverage ratio, profit before financing and income taxes. The numerator is profit before it used to be before PBIT, profit before income tax, right?
Mm-hmm.
Income tax and interest. So now it is PBFI. Let's just say
Okay.
it's profit before financing and income taxes. Okay, so here
Mm-hmm.
it was before PBIT. When calculating asset turnover, you may only use operating profit margin in your calculation. So all the other calculations, you should use operating profit margin. Okay.
Mm-hmm.
Return on capital employed divided by will give you the incorrect answer if a question includes investment income. So you must make sure you're taking operating profit for everything. That means the investment part, the financing part, it shouldn't be there in your calculations. Similarly, when calculating ROCE and interest cover, the use of operating profit is not appropriate where there is an investment income. You'll uh, you'll understand when we get there. Both
Okay.
operating profit and profit before financing and income taxes will be presented, even if they are the same amount in accordance with IFRS 18. This is what they have told. So even if the other items are not there, you're going to put zero and you're going to put the same amount. Clear?
Mm-hmm.
So this is being issued by the examining team itself. So the chances are most likely whatever they have told you, it is going to be there in your exam.
Okay.
Understood?
Understood.
This is question 432, run a company. Okay.
Mm-hmm. Okay.
And the A question is just the normal part of consolidated SOFP. The B question here, they've given a small scenario of an investment in associate, right?
Mm-hmm.
They've given you all the amounts. Okay.
Okay.
Now, in the question, they have asked you explain how Walker Company should be accounted for in the consolidated statement of financial position of Runner Company for the year ended 31st March 2006. Your answer should also include a calculation of carrying amount of the investment in associate at that date. So, what will you do? You're going to first do the working note 6. Clear?
Mm-hmm.
And then you're going to just explain your calculations, how you have reached there. You're going to explain
Okay.
whatever is being taken in the class. Just that.
Okay.
That is, this particular company has purchased 30% of Walker Company's equity shares, which denotes a significant influence. Hence, it should be recorded by using equity method, right?
Mm-hmm.
So in equity method, we have taken the cost of investment, and unto that we have deducted the share of loss for Walker Company for the year ended this March, 31st March 2006, and came to the value which should be presented within the investment in associates in the consolidated SOFP. Understood?
Understood.
Okay. Now, the other thing you should also mention where this particular loss would go in consolidated SOPL. Just now, we read an article saying all the income that you get from the investment in associate should be taken into where the investment activities. Clear?
Mm-hmm. Clear.
Okay. Now let's see. Okay. Before taking SOPL, I'm just
Mm-hmm.
going to take unrealized profit again. So unrealized profit, URP. We say URP here in Kaplan they say PUP, right?
Mm-hmm.
So all the profits made by the entity, okay, with the
Okay.
transaction that they have between them is called unrealized profit. So in this case, the parent could be a seller or the subsidiary could be a seller, right?
Mm-hmm.
Okay, and this
Yeah.
particular transaction is called an intra-group trading, IGT. Clear?
Okay. Clear.
Okay. So in case of intra-group trading, the first things first, you must cancel the receivables and payables of each other, right? So that is the
Mm-hmm.
current
Yes.
accounts must be cancelled thing.
Mm-hmm.
Clear? Second thing, if the goods are still being unsold at the end of the year, you should deduct in URP. That means the URP should be cancelled. Clear?
Mm-hmm.
Okay. Still held means it is unsold at the year end. So unrealized profit must also be cancelled. Clear? Now,
Clear.
the inventory must be included at cost to the group, that is original cost which the entity has sold it for. No profits should be there. Clear?
Clear.
Okay, this is just the logic that no one can make a profit by trading with themselves, right? Because in
Yes.
consolidation, the company is treated as one entity. So you can't sell it to your own business and generate profit out of it, right? That is
Yes.
that is nonsense. Now, adjustments of URP is like you're going to determine the URP if it is markup or margin on the basis of it. You're going to make your calculations, right? And then if the parent is the seller, you're going to take it into working note 5. If the subsidiary is seller, you're going to take it into working note 2. Understood?
Understood.
Now, when there is intra-group trading, okay, whatever IGS, that is the sale amount that you have, listen to me carefully, okay?
Okay.
From the consolidated revenue, you have to remove. That means first you're going to add both of the revenues together and remove the intra-group sales. Understood?
Understood.
Same way, while you are consolidating the COS, that means you're taking PCOS and SCOS together, you're going to remove intra-group sales from there as well. Understood?
Okay. Understood.
Okay, and that is mandatory. Okay.
Okay.
Now,
Okay.
there could be that interest, that means P might give loan to S or S might give loan to P, right?
Mm-hmm.
In this case, there could be finance cost within it, right?
Mm-hmm.
Okay.
Okay.
So, it should be included within the consolidated profit and loss, no issue. Clear?
Clear.
Okay. Now, you must understand the loan could be a combo of any other finance, right? Okay, the example given here is subsidiaries finance cost for 400,000. Okay, and the parent has owned the subsidiary for 6 months. The finance cost be consolidated would normally be 200,000, that is 400,000 into 6 by 12. Okay, so suppose the company has been taking loan from a subsidiary, okay, which is not a subsidiary yet. Okay, so
Okay.
then what happens is that suppose it is a mid-year acquisition. That means correct 6 months acquisition. Okay. So
Okay.
that means after that 6 months, whatever interest is there, it gets cancelled out. Understood?
Understood.
So in the first 6 months, it would normally be taken as a finance cost. Okay.
Mm-hmm.
Understood? In case of
Understood.
dividends, dividends should also be cancelled out from one another. Clear?
Mm-hmm.
And this is out of the scope of the FR. You are not going to be tested on interest.
Okay.
Okay. Now, the SOFP details is just like what you have studied in the previous class. Okay.
Okay.
So SOPL, you see, any intra-group sale is being cancelled. Okay.
Okay.
Yeah.
Clear.
And you see, in working note 2, we have a URP, right?
Yes.
So that particular URP would be added back.
Okay.
Okay, so I'm just going to summarize what have been taken in SOPL, right? Okay, so the URP, how did you take it? Sorry. So there is IGS, right?
Yeah.
And IGS is deducted from sales IGS is deducted from COS as well. Clear?
Mm-hmm.
And the URP is going to be added to COS. Understood?
Understood.
Clear? In
Yes.
the case of SOFP, we have already discussed how it is going to be treated, right?
Mm-hmm.
Okay, in the case of SOFP, you're going to take it under either working note 2 or working note 5, and you're going to cancel out all the receivables and payables within them. You're going to cancel out URP from the inventory, right?
Mm-hmm.
Same thing that you have studied in the previous class. Okay. In the
Yes.
in the current class, which is of SOPL, okay, URP is going to be added back to COS. This is basically going to be deduction only. The net effect is deduction. Clear?
Clear.
Understood?
Understood.
The net effect in the end is basically deductions only. Clear?
Clear.
Okay. Now the IGS, that is the intra-group sales. That means the selling price. Understood? Yesterday, in
Mm-hmm.
this case, it was 2,600, I suppose. Right? I don't
I
remember it.
don't remember the value, but yeah, that was the
There was
situation.
2,600, I think. So that 2,600 would be deducted from sales and COS. Understood?
Understood.
And the 600 that you get as a URP would be added back to cost of sales. Clear?
Clear.
In the SOFP, what is the effect? It is going to be taken in working note 2 or working note 5, and also cancel out receivables and payables. Also cancel the URP from the inventory section. Clear?
Clear.
So this is all about the URP. Okay. Now, this question, see, the workings one doesn't change for SOPL. You have to have the working note one is mandatory. Understood?
Understood.
And in the question, they have been saying that has owned 35% of Arch company since 1st June 2007, and it acquired 85% of Strip company, another company, on
Mm-hmm.
1st April 2008. So it's a mid-year acquisition, right?
Mm-hmm.
So all the SOPL component, this is the parent company, okay?
Mm-hmm. Yeah.
And Strip is the subsidiary
Subsidiary.
company, clear?
Mm-hmm. Yeah.
And Arch is the associate company. I'm not going to do the
Mm-hmm.
problem today. We'll be doing that in the next class, but I'm just going
Okay.
to explain it, okay?
Okay.
What we would do is plan company, we would take it as a whole. Understood?
Okay.
That means no amounts would be touched.
Mm-hmm. Okay.
But for strip company, we are going to time apportion it. And how are we going to time apportion it? From 1st April to 31st December. So
Okay.
revenue is like, I'm not going to the additional information. I'm just explaining it from here. We must consider also the additional information before taking the amounts.
Mm-hmm.
So what we are going to do is we are going to take 705,000 plus, open the bracket, 218,000 into April, May, June, July, August, September, October, November, December. 9, right? So
Mm-hmm.
9 by 12.
Okay.
Same way, 320,000 plus 81,000 into 9 by 12. Understood?
Understood.
So every element here would be taken as a time apportioned part. Clear?
Clear.
We'll just see the adjustments. Okay.
Okay.
Information is available. Fair value exercise conducted on 1st April concluded that the carrying amounts of state companies' net assets were equal to their fair values, with the exception of an item of machinery which had a fair value of 8 million in excess at 1st April 2008. The machinery had a remaining useful life. So working note 2. Since the acquisition, Plank Company has sold goods to Strip Company. So this is URP.
Mm-hmm.
So you must understand, if it is URP, there would be IGS. That is this one, 39 million. Clear?
Clear.
And 1/4 of these are still in the inventory. So that means for that 1/4, you have got to prepare the URP. You have got to calculate the URP. Clear?
Clear.
During the year, Plan Company sold goods to Arch Company for 26 million, all of which Arch Company held in the inventory at 31st December 2008. All of these goods had a markup of, this is about Arch Company, that is the associate. Clear? We are
Mm-hmm.
not going to
Clear.
touch associate now. We are going to just look towards Shrimp Company.
Mm-hmm.
The investment income of Plaque Company for the year 2008 includes dividend from Strip Company, which should also be cancelled. Understood?
Understood.
Strip Company paid a dividend to shareholders 18 million on 31st December. Arch Company paid a dividend of 35 million, right? So dividends is financing activity. It should go there. Dividends are investing activity in terms of SOPL, so it should go there. Associates dividend should go there. In Plan Company's consolidated statement of financial position, 31st December 2007, the carrying amount of Plan Company's investment in Arch was 145,000. Okay.
Okay.
Now, so this is the uh, carrying value. Instead of taking cost of investment, we take it as a carrying value. That's all. All other comprehensive income occurred after 1st April 2008 unless otherwise indicated. All other items in the above statements of profit and loss and other comprehensive income are deemed accrued to be accrued evenly throughout the year. That means we can divide it or time apportion it. That's all. Clear? And this
Clear.
question for 18 marks, and trust me, for each calculations you're going to be awarded marks. Clear?
Clear.
And this B part is entirely connected with the fifth additional information. That means in order to value the Arch company's um, investment. Understood?
Mm-hmm.
Okay. You can simply take a look at the answers, but we'll
Okay.
do it together in the next class. 4:33.
Okay.
Clear?
Okay. Clear.
Okay. I'll need two more classes, Sidra.
No worries.
Okay?
Yeah, no worries.
We'll do it inshallah.